Everybody, it is Saturday, the 3rd of May, 2025, and we had another strong market this week. Bonds were down a little bit. They're the only ones down month to date so far, but positive year to date. Financials turned back into the positive column for the year, and let's take a look at these charts and make some sense of it because it is now 9 days in a row that this market has been up after that gap lower last Tuesday. And from that failed break lower came this fast move higher. We've gone through the 20-day moving average. We've gone through the 50% retracement. We've gone through the anchor from the all-time high. We've gone through the 50-day moving average and the anchor from the beginning of the year. These are all levels that had the potential to become a place where supply would be found. This is the anchor from the election. Let's just color that orange as we've had it. That's yellow. Anyways, this is the anchor from the election and the 200-day moving average overhead, and we still see no signs of this market slowing down. We have strong momentum up into these areas, so we look at them as with levels of support as potential levels of resistance, not a place where we expect to find supply, but a place to say, let's pay attention, see what's happening. If we've got evidence on the shorter term time frame the sellers are taking control, then we'll listen to the market about that. But until it does so, the path of least resistance in the intermediate term remains cautiously higher. That's the only way that you can look at this market, I think. The NASDAQ, very similar. We're right up to the anchor from the election, as well as that 200-day moving average and the 61.8% retracement of this being the all-time high to this year's low. This is right here, 61.8%. So when we have these levels come together, it seems like a place where there should be supply released. But when we look at the shorter term time frame, here's our action on Friday. We have zero evidence that the sellers are getting more aggressive here. So we look at it and say the market's getting extended to the upside, but we don't have evidence that it's rolling over. So we'll give the benefit of the doubt cautiously to the buyers. If we see something like this, never meant as a prediction, but if we see something like this, and then the 5-day moving average starts to flatten out, we break below it, then perhaps we'll come back down and test the 50-day moving average and the anchor from the all-time high. I think there's a pretty good chance that we could see that happen this week, but that's a good chance. It's not a probability. The probability isn't there yet, not while we're above a rising 5-day moving average. So never confuse the two of what's possible and what's most likely. We are extended, so that raises our caution level, but we don't have the evidence the sellers are taking control. We don't have that evidence in the Russell 2000 at the anchor from the beginning of the year or the declining 50-day moving average or even this prior band of support in here. Instead, we broke up through that level, so we have to look at it and say, the market is sending us the message of strength here. It's our job to listen to the message of the market. And as long as we have these patterns of higher highs and higher lows, we give the benefit of that doubt to the buyers and say, we're at a level where there might be supply, but it's just not there yet. I know I sound like a broken record. That's the point. These markets are all telling us the same exact thing. The semiconductors are telling that as well. We had the anchor from this February high. We had a little bit of a pause right there. We had a shakeout, and from this failed this failed move lower came this fast move higher. We're up above the anchor from the beginning of the high year to date. We are now maybe going to approach the 2-year anchor and the anchor from the election. We've got the year to date anchor here, but the key is we have no sign of slowing momentum. The biotechs are in a zone where they're supposed to find supply. Support broken tends to act as resistance. It isn't resistance, it tends to act as resistance. We have prior support here. We're right at it. We've broken this little trend line. We're at the year-to-date anchor. That's that blue line. And let's just clean a little bit of this up so we can get a better look at that daily time frame. There's the year-to-date anchor. We've had a very impressive rally here. And you have to ask yourself, where does it come from? It's come from down here at 66 and a half up to 64. So where does it have the potential to go before it's likely to encounter supply that might be strong enough to become resistance? And if you look at it from that way, we're right there. It doesn't mean it can't keep going higher, but it means, does it make sense to be a buyer from a risk reward perspective? A fresh buyer, no, but if you're long, the name of the game remains protect those gains that you have by raising your stops up underneath the higher low that makes the most sense for you. The financial stocks, Last week or 2 weeks ago, we're looking and saying, well, maybe they're stuck below this prior band of support. Instead, we leapt back above it. It held as support again, and now here we are breaking new highs for this move and showing no signs of slowing at any of these key levels. I was thinking that it was likely we would see kind of a distribution in here and then pull back. But those are scenarios. You don't trade the scenarios until you have actual price evidence that the sellers are taking control. It's better to miss a move higher than it is to start to anticipate a move lower, get involved, and lose your money. Missed money is better than, I'm sorry, missed opportunity is better than lost money. Bonds, they're still having trouble in this zone right here where they've had that trouble. They're just a broken market that really, I don't think has any advantage to being involved in them. Energy names were a little bit higher here, and that's still kind of surprising considering the movement in oil itself. But you don't trade oil stocks based on what oil's doing. You trade oil stocks based on what oil stocks are doing. That's a mistake I think that a lot of people make very often is, they look at the theoretical relationships. It's like gold and gold stocks. Gold stocks haven't really done as nearly as well as gold has this year. Anyways, the a couple of the individual stocks, I mean, Apple starting to pull back a little bit after their earnings. I think that if we come down into this 20-day moving average zone down in here and that anchor from the low, then you'll likely see a nice setup this week on the long side. But let it bleed out a couple days first. Tesla is behaving well here at the 200-day moving average in the anchor from the beginning of the year. That's that thick blue line. It's a little bit extended in here, so I'd still like to see it pull back a little bit. The market doesn't care what I want, but that's what I would like to see for a lower risk entry. Palantir just continuing to drive higher. I don't know if that's an all-time closing high right there. Let's take a look. It looks like an all-time closing high at 124.48. This prior close was well, I guess I don't see that on there. Anyways, just super impressive strength on Palantir. And the thing is, we're above a rising 5-day moving average. When you're above a rising 5-day moving average, you don't expect moves like this from 90 to 120 in this short period of time, but they're possible. So you give the benefit of the doubt to the buyers with a rising 5-day moving average. Nvidia is, behaving a little bit better, and most of this gain this week, however, came with this gap, which made it difficult to participate in. Ideally, what NVIDIA would do is maybe run up to the year-to-date anchor, come in here, create a higher low, and then this might end up, carving out a nicer short-term bottom. So, or actually, might even be a longer-term bottom in here for NVIDIA. Anyways, that'll do it for me. Have a good weekend. Thank you.